With interest rates around the world remaining stubbornly low, the quest for income is never ending. There is a new way to access quality global income now on ASX. In partnership with Bentham Asset Management, VanEck have launched their new active ETF, GCAP, this month to the ASX. And here to take us through their latest active ETF is John Caulfield, Director of Distribution at VanEck. John, welcome to this webinar.
Thanks, Anastasia. Good to speak to you. As you mentioned, new ETF, another Australian first. At VanEck, we are well known for providing these intelligently designed solutions that provide access to asset classes that others don't. And the VanEck Bentham Global Capital Securities Active ETF is another good example of this philosophy.
Absolutely. So many of our watchers are probably wondering, what are capital securities and why do we need them in our portfolio? John, please take us over this.
Capital securities are essentially regulatory capital issued by mainly banks and insurers. Obviously outside of Australia, we're talking in a global context here. And these securities sit in between equity and debt on the capital structure. They're essentially very similar to the local hybrid and subordinated bond market that obviously a lot of your listeners will be very familiar with.
Absolutely. Now, we've touched on a little bit about what they're about, but how risky are these securities and what's their return profile like as compared to, say, equities or fixed income?
Look, historically, they have provided better returns than the local hybrid market through the cycle. Our fund itself is obviously relatively new, but we can look at various indices representing the sub-asset classes, and returns are somewhere in the ballpark of equity market returns, but obviously volatility, as you would hope, is significantly lower. And given these are hybrid-like securities, you get that element of bonds where they pay coupons, but also the price movement is equity-like, and that in itself brings an opportunity for an active manager to add some value.
Absolutely, or I like to say, somebody that likes owning financial stocks without the volatility of owning financial stocks.
That's it.
So looking at this specific portfolio, the Bentham portfolio, what type of securities do Bentham own? And given that these securities are rated, how are they rated?
Yeah, look, a couple of current examples in the portfolio would be the like of Lloyds Bank out of the UK, ABN AMRO from Europe, or a JP Morgan out of the US. The ratings vary. They go obviously from investment grade all the way through. Some are not rated. I mean, that's less to do with the actual issuer and more to do with the security themselves. We see some very familiar names in that universe as well. An example would be Westpac. They issue US dollar denominated capital securities offshore to complement the Aussie dollar hybrids that they issue onshore. And the overseas market is just much larger than the one we have here. And these hybrids or capital securities are institutional only. You actually can't buy them as a retail investor. So, I mean, that means it's much more liquid as well than the local market, which tends to be very tightly held.
Yeah, so we've touched on a few reasons of what the differences are between the Australian market versus the global market. But what are the reasons of why you would pick these global securities over Australian securities?
Yeah, look, it's a great complement to the Australian hybrid market, to be honest. I mean, like I said, the size of the market out there is much, much larger. So, diversification is always good. You do get a yield uplift as well. Like I said, you can get the same issuer issuing securities onshore and offshore, and the offshore ones tend to pay higher coupons. And also that price movement is different. And with that comes potential for some capital growth as well.
Absolutely. And in terms of the yields, what type of yields have they delivered historically, and how do these yields compare to the rest of the Aussie market?
Yeah, look, the yield we're quoting at the moment on our particular fund is 3.5%. Now, if you compare that to the local Aussie bank average, even after franking is only low twos. Macquarie came to market a couple of weeks ago with a hybrid, and I think the yield on that was around 2.9%. So that gives you some context in terms of the uplift you can expect. Our ETF also pays a monthly coupon, which is an added benefit over and above holding the local securities.
Absolutely. So Bentham Asset Management, they've been around for a very long time. They've been managing client money for a very long time. John, would you like to take us over their track record?
Yeah, as you said, very experienced and very impressive team over at Bentham, and have been managing in this global income, global credit space for over 20 years, and 18 odd of those 20 years have involved managing global capital securities. So, they take a very active bottom-up approach. They're analyzing companies in terms of business model, in terms of credit strength, and they also look at a range of ESG metrics as well as part of that analysis in order to determine relative value. Obviously, they're trying to buy essentially cheap securities relative to others in that very large universe. Like I said, these aren't available to retail investors offshore. So to access this particular investment, you need to go through an active ETF like ours and use a manager such as Bentham.
Fantastic. Now we've got a little bit of product info on the screen about GCAP. But John, I'd like to thank you for joining us today on this ASX webinar.
Thanks for having me.
So for more information around GCAP, you can head to the VanEck website and download a copy of their PDS, or head to the ASX website and search under the ticker GCAP.